Chapter 11, Managing Insurance and Tax. This chapter we will look at insurance first and how important it is for businesses and households. We will look at the different types of insurances and the principles of insurances or insurance, very important, and the similarities and differences then between businesses and households. When it comes to taxation, we'll look at that further on in another video, but again, we will look at the different types of taxes that are paid for businesses and households. We'll look at the PAYE income tax system and how it's calculated. So this video in particular will look at insurance and how insurance comes about. So in every business, there are risks, and the manager or the business has to identify these risks and try and put some kind of measure in place to minimize the risk, whether it is putting security systems or some kind of policy or procedure in place where they will try and minimize the risks through identifying hazards, having some kind of health and safety statement, and put a procedure then where they might do fire drills and identify hazards through their staff through a reporting system. So identifying possible risks and reducing the likelihood, as I said. And the last case scenario, I suppose, if they can't minimize risks or get rid of any risks, then insurance is important because there's so many assets that a business in particular has that they need to secure themselves against any loss of income or value of assets that they have. So what is insurance? Keywords here are it's a contract, so the people are involved. So remember, what are we always talking about? The who, the what. Give examples where possible. So the person that's been insured pays a fee, which is called a premium, to the insurance company, which is called the insurer, and then the insurer will provide compensation. So there's a promise to give compensation if a financial loss occurs. The types of insurance are insurance against any kind of assets that a business has, in particular any valuable assets, so property, cash in transit, vehicles, and any employees when it comes to their health, if they have key persons like scientists working for them. And this tax PRSI has to be paid, pay-related social insurance. So if any employees are out of work for maternity or illness benefits, parental leave, anything like that, so they can go on social welfare once they've paid into this. So the business and the employee pays this tax. Fidelity guarantee insurance then is to insure the business against dishonesty of staff. So if they're dishonest or they steal, they will be guaranteed against that. Any other liabilities then, so these are assets, these are liabilities. So anything that the business would have to pay out if, for instance, their product would injure any customers, that insurance would protect them against that. Employers' liability insurance, again, if they have any employees working for them and they have an accident at work and they try and sue the employer, then the employer is protected against that. Consequential loss, then if a fire or theft or flood occurs and the business has to close as a consequence, then any loss incurred will be covered. So I suppose any profits that they might have made, the business won't be out of pocket for that.